Hello and welcome back together to my weekly update on the financial markets. We will cover, like always, the S&P 500 index, US oil, gold, and Bitcoin, and analyze the charts via price action so that you know what to do in the markets the next days and weeks ahead. Let's start directly in with the S&P 500 index. Yeah, on the weekly S&P 500 index, like I was predicting here, with this MACD divergence to price, like we have seen it back here in the days, a correction was in front of the door and it came even harder than expected. I was drawing in here in blue the old correction back from 2022 here, and we rushed down even faster, so let's delete this path out here. I was expecting an ABC correction after Elliott wave theory. We have seen the uptrend, and after that normally follows the downtrend. So point A is going to be a lot lower than expected. Point B will then probably be also lower, and point C also. So indeed, I think we will see a huger correction than I was thinking about. But if you have reacted to all the videos of me, you could have already protected some of your positions. And yeah, the daily downtrend shouldn't be viewed in this weekly view, so it's better. Yeah, we were going down, and now it's the question, how far will we go down? Will we see a nice pullback to the upside before continuing this downtrend? All to that on the daily time frame. Here you can see we had a nice weekly uptrend, higher highs and higher lows following each other. Then also the daily we have seen a divergence, MACD indicator to price, and we have seen a break of this weekly orange upward line. Then the pause and the downtrend correction to the upside, not that far as I have expected, then turned directly, so we have been able to draw a downtrend line and exceeded the low here to the downside, and then free fall lower. I think the complete move was around 17% or something like that. Yeah, 17.5% to the downside. And yeah, in this case, it's enough to outperform the market with just not being fully invested into the market. So yeah, my favorite trading account is up 17% from my start of this trading journey. You can see it all documented on this YouTube channel. And I think you have been starting around August 2024. And yeah, you can see if you would have bought here the S&P 500 index and just hold it, would have been now in a loss in your account. So we are 17% up, and just holding would be in negative terms. So far to that, yeah, I think you got no pro-cyclic buying opportunity before we haven't seen this downtrend breaking to the upside. And even if we see a sharp pullback to the upside and breaking this white solid downtrend to the upside, you shouldn't buy it directly, because I would wait for, let's say, a bottom break of this downtrend line, a retest, and a break of the retest again to the upside, and that then would be the sign to me to get here long. Otherwise, it's just a pullback to the upside that can happen. Bear trend rallies to the upside, and then again a massive sell-off lower. So you don't want to get trapped in that one, but just follow my account, and then I talk with you every weekend or every week about markets and explain my moves. I have no crystal ball. I'm not perfect with my analysis, but this time was pretty accurate, I have to say. Yeah, so at the moment, just waiting to see a bottom. If you're short, lucky for you. I was expecting that we will see another leg up before we'll see a break to the downside, so I wasn't able to go short here. Like you have noticed probably, I wasn't able to upload a video last weekend because I was in Romania on vacation visiting a friend there, and because of that I was not that often at the desktop watching the financial markets. So that one here went without me to the downside, so I'm not profiting at the moment from this. So at the moment, not seeing a chance to short that. Maybe if we get an aggressive move on Monday to the upside, maybe back to this low here or this daily resistance zone here, that would be maybe a spot where you could open up a short position and speculate on continuation of the downtrend. Maybe stop loss then around this area here, 5,950, or even if you play safe, the all-time high. not maybe the hugest position. We just want to make a little bit money while the rest is losing. So that's enough to outperform. Otherwise, I would wait for pro-cycling breakout, retest and a break of the retest to the upside before going long again. Yeah, that's it finally for the S&P 500 index. For long-term investors, it's probably maybe not the worst idea to collect some shares around the 4,800 points level. Here, aligning nicely with the 0.5% Fibonacci retracement level, or the 0.618. That would be the last hold for price, I think. If I measure that out, that would be 27%. Statistically, it's always wise to buy if the market is 20% down. Then statistically, you would have made a fabulous performance about the long-term years. And if you take the Fibonacci tool from the last correction, we have been correcting also here to the 0.5. That would line up perfectly with the last all-time high. So I will probably collect some shares again there. Maybe not all eggs in one basket, but start buying around this level, and then even more if we continue lower. Buy when blood is running down the streets is the same, so act like that. That's it for S&P 500 index. A little bit longer episode about the S&P 500 this time, but I think it's necessary. Let's switch to US oil. US oil here on the weekly long term, you can see that the monthly solid red downtrend line got broken to the upside, made a massive move to the upside, and then corrected lower inside of this orange downtrend line. It got broken to the upside, went into a triangle confirmation and broke out lower so far. We have to adjust this orange downtrend line from the weekly here right now because we have finally made the lower low, and because of that we have to adjust this trend line. And then it looks like that with that point, and this one here, and that means we'll probably continue a little bit lower than it was first expected by me. I could argue if we will see here an A, B, C correction. We want to see it like that. So I think this weekly support zone could get broken and then retested and then even breaking lower. So it could look like something on this on the weekly, and then lower. How far lower? Maybe around this area here, some support levels around the mid $40 level, or we will see. So at the moment, no long fantasies in gold. It's correlating with the S&P 500 index, of course, because falling stocks means most of the time less demand in the industry. And yeah, if we drop one time frame lower to the daily time frame, we can see that they make decross to the downside. How should it not with this massive red move to the downside? Like I said, maybe here we'll see a rebound to the upside, probably at the same time when the stocks making a rebound to the upside, but then probably the likelihood is higher we will continue then lower. At the moment, I don't see a trade here. If you drop down to the 4 time frame, where each candle represents 4 hours of price action, you can see that I closed out my long trade in oil manually on this level here. I can show you it on my account history here. US oil was closed with a really small profit before I was going on vacation to Romania, because I had no laptop or anything like that with myself, only my smartphone. So I decided to close out the trades so I don't have to worry about them during that week. Sadly, in that week, a lot happened, like it's always that way. And so we can delete that one here out. And yeah, we have been falling. Maybe we will see right now because we're a little bit oversold. Maybe a little bit more downside edge, and then a retest back to this support resistance zone here, and then continuing again lower. Maybe, just maybe, we will find a nice setup around this area. But I will inform you, like always, in my next weekly update about that. For now, no trades for me in oil. With such massive volatility in the markets, you have to be really selective about your trades. And yeah, that's it. All for US oil. Let's switch to gold. Yeah, gold currently the absolute opposite of every other market here in my portfolio. It's just up. Yeah, we are having higher highs and higher lows following by each other. So a wonderful intact uptrend. last time's a little bit steam. So, you know, the MACD hasn't showed a dividends or something like that on the weekly so far. If we drop one time from lower to the daily time frame, we can see that it was drawing in here a price channel. And at this point here, I was speculating with a small trade on falling prices because we reached the upper side of the channel. That wasn't the case. We went a little bit lower and then have been broken out of this channel. But at the moment, they could be forming a MACD divergence. And if you zoom in, you can see the Friday was already red, so cross. So normally this should be now a divergence to price and would probably mean a correction, which would be still healthy in the gold market and still bullish for gold overall. Maybe it's time for a nice pullback, maybe something like this. And from there on then again, rising prices could be possible. And the worst thing that could happen would be a retest of this weekly uptrend here. But I think a stop with the daily is even more likely. If we drop one time frame lower to the 4 time frame, you can see here my failed trade. I was expecting that after we tested and got rejected from this upper side of the price channel, that we will continue lower. That hasn't happened. We went lower and then turned back up. And here you can see the price had struggled to get lower here. So I was putting down my stop loss level around this area where the blue dotted line was drawn in. And if you look at my paper trading account, you could see that was, where is it? Here. Gold minus 282 US dollars or 0.28% in that account balance. So even only a small loss, dividending out with the US oil profit. I think it's fine. They're still up against overall market by a lot, so everything is fine. This secondary daily up and down would perfectly align with the 200 moving average. Maybe we'll see a test of that, then a retest and a break of the retest to the downside. And maybe we could short that one, only a small position, because gold is pretty stable against all other markets at the moment, but in a heavy sell-off, everything gets under the hammer. So even gold will lose some points here. But after that, it's worth collecting, in my view, again, for long trades to the upside. But at the moment, the maximum trade would take would be short. And after that, I would like to collect some gold again long here around the $2,800 level per ounce. That's it at the moment for gold. Let's switch to Bitcoin. Bitcoin, and complete other view. We got here the logarithmic chart, so not the normal linear one. And we are on the weekly. And here we could see P-cycle top signs. That's from P-cycle indicator. And back in the days, if you trace it back, this indicator has marked the top of a Bitcoin cycle pretty good. It's no guarantee. Worked in the past, hasn't to mean that it will work in the future. But so far, this indicator hasn't hit on Bitcoin. That should be positive for the belief in the 4-year cycle. And this one is not over yet. So we have to see new all-time highs. It's hard to believe that Bitcoin will decouple from the other markets and make all-time highs while the S&P is tanking. I also don't believe that. But at the moment, I think Bitcoin is not the worst asset in this row here. Because of that, I wanted to show you that there's still hope for the 4-year cycle, at least after this indicator. So let's switch back to the normal linear chart and zoom back in on the weekly. Here you can see that the weekly uptrend is still intact, not broken. Yes, we have seen a massive hit, but we have seen these corrections of roughly 27-30% also historically in other bull markets. So it's not over yet. But at the moment, I don't see how, if speculators and investors are taking money out from markets and everything gets under the hammer because cash is king in these situations of the market, then also Bitcoin gets sold out of, and that is at the moment also the case. If we drop one time from lower to the daily time frame, you can see that the secondary weekly uptrend line got broken to the downside. We are still below this daily white solid downtrend line and got rejected here again, lower to the downside. But in comparison to the S&P 500 index, it holds pretty well. So it lost less than the S&P 500 index. And that's hasn't been the case in the past so far. So maybe Bitcoin will develop to a safe haven, but I still think it's somehow still a speculative asset. So be cautious with that. And yeah, so I think the next target will be that we will take out these lows and retest the last all-time high here around the $72,000 area. Or we'll see a break, a retest, and a break of the retest to the upside. And that then would be, of course, a really, really bullish setup for long trade opportunities. But so far, it's not the case. And it's more like, in my view, as long as we stay below this daily downward, then we will retest first the $72,000 level, which is also the 0.618 Fibonacci Grayscale level, which often is the last hole in an intact uptrend that would align perfectly the last all-time high, the 0.618 Fibonacci Grayscale level, in combination with the weekly uptrend line. A sweet spot for buying opportunity for long trade. Just as I have said. Yeah, till then I will wait what Bitcoin is doing. We can also drop one time from lower to the forward time frame. You can see here that this small uptrend can also probe into the downside. Lower low, lower high, and then it's at the moment forming a new low low. So an intact downtrend, and I think that will continue before we see higher prices. Yeah, that's it for this weekly update, guys and girls. I hope you enjoyed it and found it useful. We will hear us next week. Bye bye.